Good afternoon, Wealth Our Way Nation. What is going on? It is your main man, Charles Tank Harris, the founder and chief visionary officer of the financial literacy platform Wealth Our Way, where our motto is wealth is not only for the wealthy. I welcome each and every one of you to episode 89, Understanding How Banks Work. Before we get into this verbose subject matter, I want to thank each and every one of you who are here with me live as I stream across the Wealth Our Way Facebook and YouTube platforms. I want to give that bang, that shout out salute to Wealth Our Way Nation members who watch this program pre-recorded overnight, over the weekend, wherever they can squeeze 15 minutes of financial literacy in, and then the heartfelt how are you to the Life 101 platform members who listen to the audio recording of this very here program. With that all being said, I want to thank you once again for just your presence. We're in the middle of running the 2021 Wow Wealth Building Contest. The criteria were to, read and write a review of how you've been helped with the 15 Minutes of Finance program, the ebook, 5 Major Money Moves and 3 Money Must Do's, and then the last leg of the stool is going to be answering some questions based on the All Things Insurance webinar, which are permanently burned onto the Wealth Our Way pages, either on Facebook or YouTube or on the website. I'm super excited. We are wrapping up 2021. We are in the fourth quarter. When I started Wealth Our Way, I had no idea how things would progress. I knew from my background as a financial professional that I could always get clients to do one-on-one financial planning for. Turning it into an educational financial literacy platform with a following that would hang on to the information that they're provided and implement it in their life, I can only tell you that it speaks life into me when I get inboxes, texts, emails, calls, anything where people are showing me that improvements are being made from information that I'm providing here. The other thing I want to say is we are adding an element of things. There will be in the chat today a new form for you guys to fill out if you so desire to get me some information on you. Most of you are on my mailing list. This is not a mailing list gather. This is actual real information that can help me shape future broadcasts and also help me provide individual information to any individual who wants it. We got so many ideas on the table at Wealth Our Way. One of them is to have like an Ask Tank segment going into 2022, where the 15-minute programs will revolve around issues that are being brought to me. It's a little different than what I've done in the past, where I've said, hey, drop in the chat, drop in the inbox what you want to know and I'll address it. This will literally be a program based around topics that are popular amongst either current events, individual personal finance information, investment information, things that I'm learning from my clients and prospective clients, all for your benefit. So in the chat now, you'll see a link to a form that'll get you some questions, some information answered. I'll gather the information. My team will work with it. We'll go from there. Let's talk about banks. Why am I talking about banks? So I think you guys know, if you follow me for any lengthy period of time, and I have no fear in saying this, if I come up missing over, the course of the next few days, the banks did it to me. They killed me. But I hate banks. I'm not a fan of banks. Banks are a necessary evil in our financial system. Without going too off the topic for today, I will say I am not the only person fed up with banks. Banks are known as centralized industries of money, and we are now seeing cryptocurrency come to the forefront because people are sick and tired of centralized financial control, and they are leaning toward a decentralized financial control. If you are a student of finances in any level, if you think about how civilizations from the beginning of time, there were no such thing as banks in the beginning of time. I had the ability to do something for you. You had the ability to do something for me, and we bartered. We exchanged our value to one another. Ironically, as they say, the more things change, the more they stay the same. As they say, everything comes back full circle in life. What we are seeing, if you really, really open your eyes and your ears to it, we are seeing bartering on super steroids now. Because of the internet, I can now get in touch with someone over in Bangladesh, and me and that person can decide I have something that they value, they have something that I value. I'll give you an example. I've used Fiverr to get this logo you see behind me was designed by somebody on Fiverr. I've used Fiverr for quite a few services. And I have spoken to people all over the world utilizing their services through Fiverr. Why am I bringing up cryptocurrency and Fiverr on an episode that's understanding how banks work? I want to give you an understanding of why banks even exist. Banks exist because bartering was limited when we had limited access to each other. I couldn't do business with someone in Bangladesh 1,000 years ago, or 500 years ago, or 300 years ago, because I didn't know they existed. I had no way to get to them. And if by some chance I encountered that they offered a service, how would I pay them? I can't do what I do for them in Bangladesh while I'm here in America. So we eventually started to realize that the barter system had its limitations. And we decided to go with what is known as a medium of exchange. And over the course of history, mediums of exchange have changed a great deal. Mediums of exchange used to be precious metals. They used to be pieces of artifacts, stones, seashells. There were all different types of mediums of exchange. And eventually, as mediums of exchange evolved, we settled on currencies. Every country, every government has its own currency for the most part. These currencies are what are known as fiat currencies, F-I-A-T, fiat currencies. The fiat currency of the United States government is the US dollar. And these currencies had to be worth something, and we had to keep track of how they were worth something. So banks became the storehouse for these values. We used to have a gold standard where we told you what a dollar was worth in terms of gold. We distanced ourselves from the gold standard, and now we have a free-flowing banking system, country to country, based on a government's ability to back its currency, which is why the United States dollar is often seen as the flagship currency. And this might blow your mind if you're not thinking, because America is the physical superpower. We're the big boy on the block with the big stick. We spend more money on defense than any other country. So we can back our currency economically and in war physically. As a result, the power of the US dollar has seen such a high level dominance. Well, whenever you're dealing with something that you have to centralize because you're tying it to a government, there has to be a system that regulates its uses. In America, we have the Federal Reserve banking system, and then we have individual banks that all feed up to the Federal Reserve Bank. And we as consumers, we deal with these individual banks, whether it's Bank of America, whether it's Citibank, whether it's JP Morgan Chase, SunTrust, PNC, wherever you are, there are banks and credit unions that allow you to do business. What I think is lost on a lot of people is how these banks actually do business, what their purpose is. A bank in and of itself, its purpose is to provide liquidity for the entire body of consumers in which it serves. So this bank will serve as a place where you can go get loans for consumer purchases like credit cards, auto loans, student loans, mortgages. There's a very interesting topic going around. I think the most famous person, most visible person I heard speaking on it was Grant Cardone, talking about why mortgages are so prevalent, that the banking industry created mortgages and homes so that they can have permanent customers, because the longest lending relationship most of us will ever be in is a 30-year mortgage. Without a mortgage, there would be no need for banks, is the argument. I disagree with that argument, but it's interesting. If you have time, you can YouTube Grant Cardone's opinion on mortgages and banks and lending in general. But going back to how banks work. So banks that we go into serve as the middleman of our banking institution. We are the end user, they're the middle person, and they go to their supplier for money. They don't actually go to the government. They go to the Federal Reserve Bank, which is the bank of the government. So when Bank of America is out in the streets lending a bunch of money, it's a misnomer that they're taking my dollar and lending it to you. That's not really what's happening. What they're doing is they're taking my dollar and they are pledging it as collateral against a loan or a credit line from the Federal Reserve Bank. And the Federal Reserve Bank is giving them money, and then they are lending out that money. So if you can see it in your mind, you walk into the bank with $1, you give it to the bank. The bank calls the Federal Reserve Bank and says, I have $1. I'd like to use it to secure a line of credit so that I can have liquidity to lend money to people. Now, here's the thing about this. That process is known as hypothecation, hypothecating assets. They are basically pledging as collateral money that they have on deposit so that they can secure a loan. Then they are lending out the money that they secured to you and I. The funny thing about this is, what are we willing to pay for this process? In most instances, if I wanted to buy, and I'll just use my favorite university, Temple University, if I wanted to buy this cup from the Temple bookstore, I may be willing to pay $2 for this cup. To make this cup may have cost 50 cents. And I don't know the exact numbers. This cup was a gift. So if I'm willing to pay $2 for something that cost 50 cents, it's a pretty sizable markup. But I'm paying that markup because I don't have to create a cup, make a cup, paint a cup. It's conveniently made for me. We do the same thing with money. The reality, however, is when we look at the difference, the markup is way more significant than what we're seeing on this cup. You know right now, if you have a banking relationship, you are getting peanuts, if anything, on the money you put into a bank. You are getting very little interest. The bank is taking that money, giving it to the Federal Reserve Bank to get a loan that they don't pay a lot of interest on either. They pay the Fed's fund rates, which is a nominal interest rate right now because we live in a low interest rate economy. But then they're turning around and lending us money at significant markups. And the bad credit risks, the people who are unfortunately lower income and have had not as much experience with money, pay a higher rate than the people who have good credit and a good history with money. In some instances, you can put money in the bank and get 0.1% interest, turn around and borrow money from the same bank for a credit card and pay 19% interest. That is 190 times the amount that you're earning. And the other thing about this process that makes banks really profitable is they don't have to pledge dollar for dollar with what they borrow. They are oftentimes able to hypothecate your assets at 3 to 5 times what they have to secure it. So in essence, if a bank had $1 million of deposits, they could go to the Federal Reserve and ask for a credit line of 3 million, 4 million, 5 million. Now, when you take that multiplier by the first multiplier, which was the interest difference, banks are making tens of thousands of percent on our deposits. Now, that's their business, and we need them. The IRS makes sure that we need them. We have to use banks. We have to report our process. My problem with banks is one of the reasons I say I hate banks is they're making enough money doing that, doing what they're in business to do. But on top of that, they have a nerve to charge us fees for our accounts not having a high enough balance, for us wanting to talk to a human being, for us overdrafting an account, for us going to an ATM that's not in their network. They pass all of these costs on to the consumer. They don't need these fees to be profitable. Their business model alone is profitable. But because we don't know any better, we are paying these fees. A decentralized banking system or a decentralized currency system is going to threaten that. So when you guys see all of the pushback in the media about cryptocurrencies, and this is not an advertisement or an advocation for cryptocurrency. This is just to get you thinking why you may hear government saying we don't like cryptocurrency, or why you hear banking institutions saying cryptocurrency is the devil and it's not any good, because it stands to jeopardize the monopoly, the status quo that they have over our dollars. If I can do business with you without having to go through a bank, that jeopardizes the bank's relationship. And as I said about the IRS and banks, the government and our banking system go hand in hand. One being unearthed unstabilizes the other one. So governments are keeping a very close eye on this decentralization of the financial system. So when you think about your relationship with a bank, and I'm going over 15 minutes, but this is important. There's a book that I've read and I actually listened to it called The Color of Money by Mehrsa Baradaran. I can't pronounce her name. But anyway, she talks about the origin of Black banks and why they have not been as successful as mainstream banks. One of them is the inconsistency of deposits in Black banks. Most African-American communities, especially urban ones, we use our banks as transactional. We don't necessarily leave a lot of money in the bank. Well, if we can't commit to leaving money in these bank accounts, the bank has a harder time pledging that money as stable to the Federal Reserve Bank, and they can't borrow. So they treat us not as good. We pay more in fees, more in penalties, more restrictive accounts, because they want to force us to keep our money stable so that they can borrow at a better, more favorable rate because they have a higher security base. These are things that I'm trying to teach you so you can learn how the economic and financial system works and try and find a way to navigate it for your advantage. So with that being said, I hope you guys enjoyed this 17 minutes of finance today on how banks work, and you keep your eyes and ears open and learn a little bit more about how this affects you personally. And please, please, please join me tomorrow for another topic. And always remember that wealth is not only for the wealthy. You guys have a great day, and I'll see you.